If you've been watching headlines at all over the last week or so, you have seen news headlines that the stock market has taken an absolute beating in the last week or so. Now, you might be asking yourself, how does this impact the housing market and specifically here in Southern California? Well, in this video, I'm going to break that down on what exactly are we seeing in the market right now, and very generally speaking, what do we normally see happen when the stock market goes either up or down? How does that affect housing? So I'm going to break that down. So first of all, like I said, if you've watched the news at all, you've seen the stock market has taken quite a big dip in the last week. Now, mind you, from the time that I'm even filming this to the time that it gets posted and you're watching this, some time has passed, so who knows what's happened in the meantime. But we saw stocks go straight down. All the headlines in the world said the housing or the stock market's crashing. And then even at the time that I wrote this yesterday and filming it today, it's picked back up in a big way this morning. So it's very dependent upon when you're actually looking at this. So that's number one. Generally speaking, number two is when the stock market goes down, it's on sale. Unless you're actually selling stuff, that's really when you're locking in any potential losses you might have had. So I just wanted to get that part out of the way first. But let's talk about how the stock market itself affects real estate. And it doesn't directly affect real estate at all, but obviously there's crossover. So here is, and this is just me putting it very generally and as simply as I can, is when stocks go down, interest rates also go down. And that is interest rates in general. And when interest rates in general go down, mortgage rates typically go down. Okay, so we see stocks tip down, and we usually see interest rates go down as well too, which is exactly what we saw this last week. We saw rates go from 7.25 down to 6.5 almost in a couple of days, and then they've readjusted since then. So that happened. The second thing is when rates go down, when mortgage rates go down, housing gets more affordable, meaning it's less expensive to actually purchase a home. And a big part of that is the interest rate on a mortgage dramatically affects the payment way more so than price actually does. So with mortgage rates going down, home affordability actually goes up, which we did see that as well too, with mortgage rates coming down from really more like 0.5% or 0.25%. That makes a big difference on affordability. Okay, so those two things so far have checked out. Now, the next thing that usually happens is when housing gets more affordable, more people buy. So that's where we're not seeing at the time that I'm filming this, but we might. So let me explain. When more people go to buy, prices will end up going up. Now, there is a small window of opportunity here, and unless we see a massive 10, 20, 30% drop off in the stock market, this would continue past me filming this, which we'll keep sending updates out. But from what it looks like right now, is there's this window right now where everyone's seeing the headlines. I shouldn't even say everybody. People that are looking at the headlines are seeing the stock market's crashing. This is the beginning of the big crash that everyone's been talking about for the last 10 years. All of that. So a lot of buyers go and sit back on the sidelines. It's probably the same buyers that sat back on the sidelines 2 months ago when it was the holidays. Same people that were sitting on the sidelines because of the election before that, same ones that were waiting for interest rates to drop before that, and so on and so on and so on. There's always something to wait for, and this is just the headlines in the news right now. So how is this affecting the housing market right now? Well, if you've been paying attention to our last few videos, especially in our market updates, we are seeing a very competitive market. We have moved from the slow winter market into a very hot, going into the summer market. Now, this has been multiple offers on almost all properties that look good and are priced right and are marketed well. Those homes are selling very fast, and a lot of the times they're selling above list price. This little hiccup in the market is scaring some buyers, and what this will likely do is put some more buyers on the sidelines. So there might be a good opportunity to get in the market right now and find a potential deal. Now, am I seeing that happen right now? Not really, to be honest. We wrote as many offers as we did this last week as we did the week before, and 2 weeks before that was really busy. So we haven't actually seen any boots on the ground impact from this, and I'm giving very real, just like this is what we do for a living, is actually help people like you who are thinking about buying and selling. And so we have not seen a massive amount of our active buyers actually stop looking. That's number one. Number two is we have had absolutely no conversations with sellers that are panic selling because they think the market's going to crash. Now, at the end of the day, you're always going to be able to look at headlines and think the world's going to end because that's just how the news is. However, what we're seeing right now is the long-term effects of this if the stock market were to continue to go down, interest rates will likely continue to go down, which means home prices or rather home ownership becomes more affordable because of lower interest rates, which is going to drive up prices. Now, I'm saying this in a point in the market right now. I'm filming this in the beginning of April, where we just filmed our housing market update last month, and we are very much ramping up into a busy season that's going to go through the summer. So this might give a window if you're in the market to shop right now. If you are looking to sell right now, maybe you take a 1-week hiatus of not panicking if your home doesn't sell in the first 6 days, if it looks good and is priced right, because there was this little shock to the market. So overall, I don't see anything pointing to this being a major factor in the housing market. Honestly, I think the only thing this likely could do is continue to see interest rates decline faster than we otherwise would have expected, which will accelerate more buyers to the market, which will accelerate more prices. So I'm not making any big changes. We're not making any big changes in advice of what we're giving to our clients. If you want to sell because it makes sense, if you want to buy because it makes sense, we're saying just continue acting on almost as if nothing really has happened, other than the stock market has changed a little bit and we're seeing a little bit of difference in mortgage rates, which is good. So anyway, that is a market update for today, and this isn't a normal monthly market update. And by the way, if you are not already on our monthly updates and you're just watching this on YouTube or on Instagram or wherever, down below in the description, I'm gonna have a link for you to join our newsletter. If you didn't get this in your email inbox, we send out what we feel is the most important thing every single Friday. So if you want to see that, click the link down below or go to ocmarketupdates.com, and I will see you in this next video.